So we strongly believe in an open ecosystem, meaning that we are not going to build a siloed infrastructure. We are going to build something together with industry partners. We are going to build what we are building together with partners that are unique and have a proper value proposition in specific areas. And that's why we work very closely with Chainlink, because Chainlink has a unique capability in the areas of data and interoperability. And I think that's how we can grow the industry together. I'm Lidia Kurt. I'm the CEO at BX Digital. And BX Digital is the first DLT trading and settlement facility in Switzerland. And we are the first one to run the regulated settlement system on public Ethereum. Running a trading exchange, as we already did previously in the traditional world, we saw inefficiencies, not on the trading side that much, but rather on the settlement side. So for us, seeing the DLT technology coming into place, we saw that as a big opportunity for us as an exchange group, but also for the entire financial market to actually change something. And that's why we looked at DLT very closely and realized that when we start with an offering on the trading and settlement side, we can actually move something in financial markets. And we decided to take that opportunity. So operating a trading and settlement infrastructure on a public Ethereum means that we can do settlement without a CSD. If we take that offering and look at it more closely, it means that on one side, the trading remains fully traditional. It remains off-chain. So we are actually using the same trading systems that we are using in the traditional exchange. Where the magic happens is in the settlement area. So settlement is on public Ethereum. That means that we can settle, so move the asset and the cash by using public blockchain technology. That allows us to settle transactions that have been traded, settle those transactions without CSD, without counterparty risk, and within a couple of minutes. You might know today's settlement processes go up to 2 days, and that's how we can heavily reduce the amount of time it requires to do a settlement. So we reduce it from T+2 to T+ a couple of minutes, so near instant. It also means that we can reduce costs quite heavily. So if you can eliminate the CSD as an intermediary function, that means that you can more directly settle, meaning that you can reduce costs. So having a trading and settlement facility on the blockchain means what we are trading are tokenized securities. So we're talking about tokenized equity, tokenized bonds, tokenized funds, even newer kinds of tokenized assets, meaning, for example, tokenized direct ownership towards commodities, as an example. But we're also talking about new forms of financial products that we don't even see yet today. So it's really a question of bringing new features to those traditional products. So because those products are tokenized, meaning they are digital, they can have very interesting digital features. As an example, they could pay daily coupon payments. They can have digital voting rights. But they can have a lot of features that we don't yet know about. So for me, it's really the current moment we are in is the moment when you look back when mobile internet started, as an example. So we might have looked at an Excel on our phone, didn't really make sense. It was much better to look at it on a computer. But we then didn't realize yet the applications of mobile internet, Instagram, Uber, that wouldn't exist without mobile internet. And for me, that's the same thing with digital financial products. So the mere fact that those products are digital, the product itself is digital, that allows for so much additional features and opportunities that we yet not have thought about. So running an exchange means that we generate data points. So for example, end of day closing prices of equity. These data points can then be reused by our participants. For example, they could generate derivatives that have some trigger functionality based on an underlying where you would require the price data. And if those additional products, for example, those derivatives are blockchain based as well, it's very convenient if those data points are on the blockchain as well. So that actually unlocks the full potential of blockchain, because then it's not only the assets that are on the blockchain, but rather the full processes that are involved around the assets. So, for example, then automatically making those triggers that happen. And for that, we require data on-chain. And using, for example, Chainlink's data solution helps to bring the data on-chain and for the participants to actually access that data. Because ultimately what we want to have is a single source of truth, not just for the assets, but also for the data. So to deep dive a bit into the technical details of our solution, it's very important to know that our customers, the direct customers accessing our solutions, are banks and other regulated financial institutions. So they are running on traditional systems. So for us, when implementing such a solution, such a settlement solution on the blockchain, it was very important to consider how banks and those financial institutions can easily access this solution. So we said, okay, we put that on the blockchain that really makes sense to be put on the blockchain. That, for example, implies that the trading systems can remain off-chain. We don't generate that much added value by moving that on the blockchain. That then again means that banks can use their existing connectivities to traditional trading venues to actually trade tokenized assets. So they don't have to change anything on the trading side. What we also did is we kept the cash leg off-chain, meaning that we are not using stablecoins, we are not using any other form of on-chain cash for the settlement process. What we are doing is we are taking the asset which is on the blockchain, we are locking it in a smart contract, and we are then triggering the cash payments through traditional fiat rails. So we are connected to the Swiss National Bank's payment system, and we can directly trigger cash payments on the central bank accounts of the banks. So once a payment has been triggered, that feeds back an information, payment has been successful, and we can release the blocked asset and transfer it to the buyer. That process takes around 30 minutes, so a very small amount of time compared to what settlement takes today. And it shows how you have to combine different systems. So you have to combine the blockchain with traditional payment system, with traditional trading venue systems. But only then, in our opinion, it is possible for highly regulated financial institutions with legacy system to actually access new infrastructures. For us, it was very important to keep the asset part on the blockchain, because that's where we can generate the efficiency gains. And when we were talking about, okay, we're going to bring the asset on chain, the question is, on which chain are you bringing the asset? And there is always a trade-off. It's a trade-off when selecting the blockchain. It's either highest security, that's the regulator very much likes. It's either highest scalability, which you as a company like, because you might be able to reduce costs there more heavily. So within that trade-off, it's a decision you take. And we took the decision to start on Ethereum, to really go for the highest form of decentralization and thereby the highest form of security. And we did that because we are a regulated system. We are a Swiss FINMA regulated financial institution. And as a first step to enter this world with a blockchain technology, it was much better to do that with a blockchain that, it is fully decentralized, fully secure. However, looking into the future, we do not know which blockchains are going to prevail, which blockchains are going to be one that's the infrastructure is being run on. So for us, it's very important to extend the blockchains where the assets are being run on. We want to be able to settle all the assets that our clients are actually creating. So we strongly believe in an open ecosystem, meaning that we are not going to build a siloed infrastructure. We are going to build something together with industry partners. We are going to build what we are building together with partners that are unique and have a proper value proposition in specific areas. And that's why we work very closely with Chainlink, because Chainlink has a unique capability in the areas of data and interoperability. And I think that's how we can grow the industry together. And so being in Switzerland comes with two very good opportunities. One is a regulatory regime, which has put in place very early on. So we were able to start applying for this license already a few years ago. We were able to rely on the regulatory regime, which is secure, which doesn't have any limitations. So we can really have a good economics on that or within that regulatory regime. And the second point is we have almost 50 banks in Switzerland having cryptocurrency custody infrastructure. Switzerland is a small country, but we have a lot of banks. But 50 of those, I think there are around 200 banks in Switzerland, have cryptocurrency infrastructure. And running our infrastructure on public Ethereum means that we can use this public infrastructure that the 50 banks have built and just tap in. And that's also the main reason why we are focusing on public blockchain, because there is just the biggest ecosystem. It's the biggest ecosystem in terms of the assets that are on, but it's also the biggest ecosystem in terms of infrastructure that is already out there. And in Switzerland, I think we are in a very special position that we have so many banks ready to actually tackle those new tokenized forms of assets, and that's why we are doing that here.